Hey guys, we are live. I think this is working. So this time I got the mic the right direction and we got some perfect lighting here. So let's get it going. This is Crypto Poppy. You know me. You're hopefully subscribed to my channel. If not, yo, subscribe right now. Do it right now. I swear it's going to be worth it. Yeah. So today we're talking about crypto loaning. We're also talking about crypto borrowing. All right. So what is the main difference between these two? Um, as opposed to going the regular classic route where you go to a bank, you ask for a loan, your bank approves you, goes through your credit history to check if you're eligible to take a loan out, whether you're an entrepreneur or you just want to go on a crazy vacation in the southeast of France, whatever. You know what I'm saying? Anyways, so we're gonna go through the various platforms available. We're gonna go to the main key differences, and this time here, I got my browser window open, so we're gonna go through each tab. And yeah, so let's get it going. So how does it actually work? How can you lend your crypto assets, or how can you borrow some crypto assets? So regular Google search. What if you just Google search Bitcoin lending? You get how does borrowing a loan in Bitcoin work? Well, essentially, you're just it's just like a standard term loan. You borrow money that you pay back plus interest and fees over a predetermined period of time, and then you pay it back in fixed installments depending on your loan agreement. So, as of this definition, I don't see any differences with the regular way of going through a bank and asking for a loan, but believe me, there are differences. So here we go. I'm a more of a visual person, so I like this little graph here made by Cryptomaniacs. What is crypto lending? Let's get deep into it, guys. Jack is the borrow. He borrows the money from a lending platform. Okay. First key difference. He's not borrowing from a bank, he's borrowing from a lending platform. To allow the loan, he had to put up some crypto as collateral. So you're borrowing the loan, but you already own crypto assets that you're putting on the side as collateral in case you don't pay back. Then this platform is able to grab that crypto assets from you. When he's ready, when Jack is ready, he'll pay back the loan with interest. So now the key mediator in between Jack, the borrower, and Susie, the lender, is the lending platform itself. And that is the key decision that you have to make as either a borrower or lender. Which platform do you want to go on? So that's this trusted intermediary. Sorry, guys, I'm getting notifications. I'm going to close that down. Boom, so you don't have to see that. Okay, so the lending platform is the intermediary between the two. It allows individuals to do business safely, and as a reward for the service, of course, to get commission, right? That's how they're going to make money. Susie, the lender, she wants to hodl. She believes in the crypto space, but she does not. She does not want to convert her crypto to fiat money. That's why she's on these lending platforms. She wants to make money through her crypto. And she wants to be able to earn interest because she knows she wants to keep that crypto. She believes in that crypto. And the thing is, guys, the thing is that Susie is going to be locked in. She won't be capable of taking out that crypto until the predetermined amount of time the contract has been validated. Let's say it's a 3-month loan. 3 months after, she'll get her crypto back plus the interest, which she will claim back. Cool. So we got different platforms. So we already kind of see things that we need to think about. At the end of this video, I'm going to have a graph for you guys with the pros and the cons so you can kind of like, we can all cement these ideas together. So platform I saw was Nexo. Nexo seems to be a prominent player in this space. They claim to have instant crypto credit lines. All right. They're saying don't sell your crypto, don't lose the upside potential. Next bull run, who knows? Maybe it's in 3 months, 4 months. At least you can partake in it, keep it, and get a credit line. All right. So the main thing that I see from these guys right away, immediately on their website, I see $100 million insurance on custodial assets. What does that mean? That means these guys are insured, right? That's huge. If you lose your money, if something happens, boom, you're insured. You're sure to get your money back. They claim to be the largest and most trusted crypto lender. I don't know. That might change quick. There's so many players getting back into this space. Guaranteed approval and no credit checks. That is a plus. All right. You don't need to be already banked. You can be somewhere in, Ethiopia, somewhere in Vietnam. You don't have to have a bank. There's no credit checks. You have guaranteed approval. What's great also, no hidden fees. Guys, I don't work for Nexo. I have nothing to do with them. I'm just kind of, I was shopping around, right? They're promising 8% interest. That's pretty big. So yeah, let's look at this cool article from news.bitcoin.com. And they're saying, let me read this word for word. Within the crypto space, lending is about more than simply attempting to mirror the products to be found in the traditional financial system. So that's what we're saying. That's what this whole video is about. What's the main difference between lending with a bank as opposed to lending with a crypto lending platform? A lot of crypto businesses struggle to obtain banking facilities, and for these entities, having access to alternative sources of capital, be it as a bridging loan or to support long-term growth, is vital. Pretty interesting, guys. Here again, we're talking about Binance, and that was huge news, guys. Binance released their crypto lending kind of, solution, which was crazy. They actually promised 15% on their BNB coin. That's insane, guys. I don't know if you, I mean, right now, if you go on an Ally account or, any types of savings account, the max you might get is 2.5%. Nuts. All right, let's go. And they're saying here, this feed says something about the level of interest in crypto lending, but it probably says more about the strength of the Binance brand. It may also say something about the diminishing ways for people to earn interest on their fiat holdings. Thanks to negative yields, you're now likely to be penalized for purchasing 30-year government bonds. Guys, we're seeing negative interest rates around the world, not yet in the US. Insane. I've never seen anything like that. And here we have a company called Bloom. All right. They're actually, instead of, as we saw in this first graph here, right? I think, yeah, Jack the borrower, he had to put some crypto as collateral. These guys here have a crazy kind of innovative idea where you can put your social credit score as collateral. Never heard of that. That's pretty cool. Another company I kind of looked at, CoinLoan. I like this company because they have loan terms, so you can calculate how much money you make, euros, collaterals. You can see yourself as a lender or a borrower and see your investment amount and the interest rate you can get. Guys, they got good security. I did a little bit of work, and they're really strong on explaining how it all works, the benefits, the pros, and the cons. If I were you, I'd look at that. Third player I saw, BlockFi. Why do I like BlockFi? Because you can borrow USD. You can borrow fiat currency and earn interest on it. So they also support Bitcoin, Ethereum, and stable coins, I believe. Yet, I want to point out they have lower interest rates, and their loan durations are on 12 months. So guys, right now, let's stop right now and think about what we've seen. Let's look at crypto lending platforms for their security. Okay, let's look at them for the amount of loan durations options that they provide. Let's also look at them, the interest rates per cryptocurrency. So, for example, BlockFi offers 4.5%. On Nexo, we saw 8%. What does that mean? Look into it because, guys, that's a huge difference, all right? Here we go. The other advantage and why I looked at BlockFi is because it claims that applicants can get the money into their accounts in 90 minutes from the start of your application. That's fast, guys. That's faster than any other banks you'll ever see, okay? BlockFi interest rate starts as 8%, and they charge a fee, 1 to 2%. That points out to the commission. Here we go, guys. And this is another important negative, a con. Let's say your Bitcoin that you are putting as collateral actually significantly drops because we're in a bear market. Let's say, okay, that's going to set off a trigger. The borrower will have to add more collateral to the account in order to maintain that 50% loan to value ratio. So you need to think about that as well. So let's look at our graph, guys. Let's look at our graph. Here I got you the pros and the cons with some weights. First pro, we talked about it, the unbanked. Okay, the unbanked are often referred to the people that are in the third world that do not have credit. They've never had credit. They're not able to be entrepreneurs. They're not able, maybe they're super far away from a bank or a public institution that would lend them that money. Hey, how are we supposed to agree to let you borrow money if you have no history? We don't know if you're just going to run back with the money in the village and never come back, right? Unbanked have access to that. Unbanked are able to make loans or able to borrow money on the crypto lending platforms. Same with entrepreneurs. You want to start your own company, you're 16 years old, you have an amazing vision, you dropped out of college, go to a bank. It's going to be hard. It's going to be hard to get money. But with this crypto lending platform, excuse me, you know, right away, 90 minutes, you'll be able to get your money. High interest rates as a lender. As I said, we looked at 8%. Hey, that's unheard of. Even you can even find through Binance solutions, platforms that are lending to you on Binance. They're lending to you at 15%, guys. That's huge. Alternate ways of collateral. We saw with Bloom. People are coming up with innovative ways to let you borrow money, but also in case you default, to gather that money back. It's extremely fast. BlockFi, we saw 90 minutes. That's awesome. And the flexibility of it, that's pretty important, because usually when you let your money borrow to a bank, you're going to be stuck. But here, I'm seeing a lot of cool flexibility around it, so I like it. And then, hey, if you want to hodl through this market, why not make some interest on it, right? If you can make 80, $100, imagine, a year lending out 0.5 Bitcoins. That's not bad. But I want to point out, make sure that if you want to hodl, you want to get paid in either fiat currency or you want to get paid in more Bitcoins and more Ethereum. So you got to look at the options. Cons, guys, this depends on you, but of course you got anti-money laundering. They're going to go through KYC, know your customer. They're going to ask you to upload a picture of yourself. They're going to ask you to get some information, phone number, etc. To some, that might be a negative. To others, that might be a positive. Hey, I don't know what you're up to. Another con, if the cryptocurrency tanks, what happens? Well, we looked at it, and if Bitcoin crashes and you set that as collateral, crashes, the value of it is under 50% of what you wanted to get out a loan out of it, then hey, you're going to have to put more. You're going to have to put more Bitcoin so that value gets up. Regulations, this is a whole new space, and any new space, there's more risk. There are more regulations involved. You might have to deal with institutions and, declare that in your taxes. Not your keys, not your coins. You're giving out your coins, right? Probably your key to a different wallet, depending on the platform, how they're implementing this loan. If it's not your keys, guys, it's not your coins. I want you to remember that. Insurance. If there's no insurance, what's going to happen? I don't know. These are new lending platforms. Nexodo, we saw $100 million backed up in crypto assets. Pretty safe bet. And then you're locked in for a period of time, guys. I know hodling is all about it, but what if the bull market comes through? What if you see stuff, guys? Anyways, if you've done it, if you've actually gone on these lending platforms, given a loan or borrowed some money, please comment below or join our Facebook group, the Crypto Poppy. Please talk about it. I haven't done it yet, but I'm really interested, and I would love to know what your experience was like. So guys, thank you so much. I'm going to end the stream right now. It's great.